There we go. Yeah, there it goes. We're recording now.
We'll give people a few minutes a couple minutes to get logged in here. I see some folks starting to join in. Everybody that's joined so far, thanks so much for joining us. We'll give everyone just a minute or two to join the webinar, and then we'll get started. Thank you everyone for joining us today as we discuss the integration that Rapid POS has built with AvaTax for dynamic tax calculations. This is particularly important when you're shipping goods from your store to other tax jurisdictions to ensure accurate tax calculations and streamlined tax reporting and tax nexus evaluation. I'm Matt Collins, the CTO at Rapid POS. Our other panelists today are Diorn Ayers, the programming team lead at Rapid POS, Jordan Carpenter, the Strategic Alliance Manager at Avalara, and Aaron Meldy, that's right, the Senior Sales Executive at Avalara. The agenda today will include a presentation from Jordan on the why of using AvaTax, both for your in-store operations and on the Rapid platform, in-store operations on the Rapid platform, as well as your e-commerce store with AvaTax plugins. Then Diorn will give a live demonstration of how the integration works to dynamically calculate tax on the ticket using items and their tax classification. And then we'll save some time at the end for a Q&A session. Some questions we will answer directly in the Q&A window, and some we will read live and answer on the webinar. As your questions arise, please enter them into the Q&A window of the Zoom meeting. And with that, Jordan, please take it away.
Perfect. Thank you, Matt. Thank you. So yeah, for those of you that are not familiar with Avalara, this isn't a slide to brag about us. It's just to show you that we've been around for a while and we're handling tax automation for a number of companies. So we've been around over a decade. As you can see there, we are, we work with over 30,000 active customers. And it's actually interesting that it's a lot more than that. We've set the threshold at a certain amount that those customers spend with us yearly to hit that number to be counted. So it's probably closer to about 50,000. And then we went from a small office back in 2004 on Bainbridge Island, right outside of Seattle, to now across the U.S. We've got 15 offices, 15 offices across the U.S. and internationally. So, can you hit the next one for me? Go on. Thank you. So to start off with, just want to let everyone know kind of why sales tax is important, right? You may think, hey, is it that big of a deal? Are the states that reliant on it? As you can see here, sales tax or transactional tax, as we like to call it, accounts for 47% of total state revenue. So obviously goes into building roads, transportation, the list goes on. It's a huge piece of the revenue that a state brings in, and it's something that they count on. That has definitely played into and impacted some of the recent changes that we'll get to later on in the slide. So first things first, when you look at sales tax or transactional tax, you've got to look at Nexus. So Nexus is a term used to describe the requirement of a merchant to register and in turn collect, file, and remit within a state. So there's two big components to Nexus. One is a physical presence piece and one is an economic nexus piece. So we're going to get into economic nexus a little bit more, but to start on the physical presence piece, the big things to look at there is, obviously where you have office locations, right? If you're in a state, you have an office headquartered in a state or a store headquartered in a state, you have physical presence in that state. The other big thing to look at is if you have sales reps of any kind traveling to any states, that can typically, and these rules are different state to state, but that typically is going to trigger Nexus. If you house goods in a warehouse in a state, that's typically going to trigger Nexus. We work with a number of merchants that participate in FBA or Fulfillment by Amazon, and that is a huge Nexus triggering piece, right? You don't always know where Amazon's going to put your goods, and that's something you've got to track, because if you've got, I use Phoenix as an example because I know they have a huge warehouse there. If you've got goods stored in Phoenix, that's going to trigger physical Nexus in Arizona. So again, something to stay on top of from a Nexus footprint piece. And then also, there's what we call economic Nexus. So this wasn't really a thing until July of 2018. And Dora, can you get the next one? And so that is when, June of 2018, that is when South Dakota took Wayfair, a company I'm sure many of you guys are familiar with, a furniture retailer, to court and said, hey, you guys are selling to consumers in our state, but you don't have Nexus. You're not registered in our state. And it was kind of two-sided. One, they felt that it was an unfair advantage to merchants within the state of South Dakota, right? If you're buying a $1,000 couch and you're talking about adding an extra 7.5% from the local merchant versus not having that 7.5% via Wayfair, that's a big swing and is going to cause people typically to lean towards that same couch and not have to pay tax. The other thing was that South Dakota wasn't receiving any tax revenue from this giant corporation that was selling into their state. So they said, that's not going to happen. We're going to take this to the Supreme Court. The Supreme Court ruled in favor of South Dakota, and that ruling basically said that each state could set their own Nexus or economic Nexus threshold. So each state in good old sales tax fashion kind of came up with their own rules around that. So we go to the next slide, we can see a couple of examples there. States like Tennessee and California said, hey, we're going to set a higher threshold, 500,000 in sales before you trigger that Nexus. You've got other states like Colorado that set it significantly lower at 100,000. Kansas is still pushing the idea around of having a zero, I should say, I guess a 1 penny threshold. If you sell any item into the state of Kansas, they're looking at that causing economic Nexus. That is not passed yet, just as a heads up, but it is something they were looking at. So you may see these thresholds change in the future. The big one I want to point out, because there's a number of states that do this, Hawaii being one of them, as you can see listed. North Carolina, my home state, also does this. We have a two-sided threshold. So it's either, as you can see with Hawaii, it's either $100,000 in sales or 200 transactions. So even if we're selling, T-shirts at $20 a pop, if we sell 200 of those, we're obviously not hitting that $100,000 threshold, but we've hit the transaction threshold and then still have to get registered in that state. Excuse me. And as you can see here, a number of states have already enacted these economic Nexus thresholds. So if you look at 50 states plus Puerto Rico is how we typically look at this, there's already 5 states that don't collect sales tax. So you can eliminate those. Out of the remaining, I think there's only 3 that haven't set these thresholds. So most of the states out there have them. And while a lot of the thresholds are similar, i.e. North Carolina and Hawaii, you've got to make sure you're tracking each one to know where you're going to hit that Nexus. The other thing that I've heard since joining Avalara a number of years ago is we'll talk to merchants and they're like, yeah, we can take care of this. You know, tax rates map up to zip codes. A good buddy of mine at Avalara always says that the zip codes were made for the Postal Service, and they weren't. They weren't made to track tax jurisdictions. Think of tax jurisdictions very similar to voting jurisdictions, right? They are kind of gerrymandered. They're set up for certain reasons. This is a prime example, as you can see in 80111. It's a zip code in Colorado, and we've got 1, 2, 3, 4, 5 different tax jurisdictions within that same zip code. And these, you know, there can be all kinds of reasons behind this. One of the biggest ones we see is a transaction tax. I know where I'm at, Raleigh, North Carolina, passed the transaction tax, a transportation tax a couple years back. So we voted to fund public transportation, i.e. new buses, and then eventually a light rail. And so they increased our sales tax 0.25%. And merchants had to be aware that was coming and that was going to hit a certain day and thus update it. Another big one you'll see is stadium taxes. So if you're in an area near a stadium and the city and or state has agreed to partially or fully fund said stadium, a lot of times that is going to come from the transactional tax revenue. And then you can see there's just a couple of examples down there. Now, outside of just calculating the tax, right, it's not just a rate. There is a big component of this that is taxability. So states and taxing jurisdictions look at items in different ways. These are just a couple of the fun ones. If you've ever seen a presentation by Avalara, you've probably seen or heard someone talk about the bagel situation in New York. If you buy an uncut bagel, it is food and it is tax exempt. However, if they slice it for you, it is then classified as prepared food and taxed. I don't know the reasoning behind donuts in Texas, but as you can see, if you buy less than 5, they are taxable. But once you get over 6, they are tax exempt. A couple of the neat ones that are not listed on here, but come up all the time. Clothing in New York is really interesting. If it's either 100 or 110, I believe it's 110. But if the item of clothing is below $110, it is considered clothing and is tax exempt. If it is over that 100 or 110 threshold, it's then classified as a luxury item and therefore taxed. Texas also has a wild one where they tax software. They only tax 80% of the purchase price. The other 20% is not taxable. How they expect people to manage that is beyond me. Something we see a lot of now, or anything related to the medical field. They have a lot of different rules around there. PPEs, a lot of different rules. Apparel, a lot of different rules. Some places tax belts, some places don't. Some places tax hats, some others don't. The list really goes on. So that's a huge component when you're looking at, assigning the right tax rate to the right item within the right jurisdiction. So I think we've probably all kind of come to the realization that taxes aren't the easiest thing. You know, transactional tax isn't the easiest thing to deal with. And that's why companies like Avalara exist. We've got a solution for automating that tax compliance. And just kind of a heads up on what all that includes. I mean, we talked about Nexus, right? We've got the ability to help you figure out where you have Nexus, and we'll get into that later. Our tax engine looks at product taxability to make sure that it is assigned correctly. It looks at the jurisdictional assignment. So when we're looking at the breakdown of those tax jurisdictions within the same zip code, we've got a solution that assists with exemption or reseller certificates. So if you're selling into any resellers or nonprofits that may not be required to pay tax, that's a huge piece. You got to make sure you're on top of those certificates. That's something we do. And then a big one is, once you collect all of the tax, right, you've got to get it back to the state or local jurisdiction. You can't just keep it for yourself. I think that is a felony nowadays, so you've got to make sure you remit it back to those authorities, and that's something that we assist with as well. And that's just a little quote from one of the folks that works with us. Excuse me. And just wanted to kind of showcase here, we work within 700 different platforms at the moment, or I should say we have pre-built integrations into those. This number's actually increased since the first of the year too. I believe we're a little over 800 now, given some new partners we brought on. But as you can see here, a number of different ERPs, a number of different e-commerce platforms, a number of different POSs that we plug into. Also, we run into this a lot if folks have a component, whether that may be back in front end, et cetera, where they need us to connect. As long as the system is open, we typically have the ability to connect to it. And then outside of just the software piece, Avalara offers a number of professional services. Two of the big ones that I see on here that come up most often are a Nexus study. So we talked about the different kinds of Nexus earlier on in this presentation. To be completely honest, the economic Nexus piece, fairly easy to track yourself and see where you have exceeded either sales or transaction limits within the states. But a lot of times the physical components or where your goods may be or attending trade shows or all those things that were listed before are not always the easiest to track. So we have a team that is dedicated to assisting with this. The other big one that comes up, we assist with, so it's listed here as voluntary compliance services, but more commonly VDAs or voluntary disclosure agreements. So merchants that may have had Nexus or should have been registered and remitting sales tax in a state for, I've seen as long as 6 years that they have not been doing so. We actually will go to the state on their behalf and negotiate that payment. So, let's say somebody owes, and I'm just pulling numbers out here, but say they owe, $4 million in back taxes. We're going to go and obviously attempt to get that lowered for them. And I mean, 99.9% of the time I've seen that work. And folks and merchants, have benefited from that. So, and then this is just a couple of the different brands that we work with, just to show you that we work with folks of all sizes. Some of my favorites on here. So, I'm a bit of a nerd and a gamer. So, Epic Games, you guys are familiar with Fortnite. They use us to automate all of their tax. Epic is actually a North Carolina-based company. Not too far down the road from where I sit currently, but they're always an exciting one to see. I'm a beach guy, so I like that we work with Rip Curl. And then the other one that I really like is NetSuite. So NetSuite is a partner of ours, but they also use us internally to automate their tax, which I think just kind of speaks volumes about the service we provide. And then who doesn't like ice cream? So Ben & Jerry's uses us as well. And then this is my favorite piece. So I know I talk to folks daily that are like, how do states expect us to handle this? Why should I have to pay to automate? So a number of states have come together and created what is called the SST, or Streamlined Sales Tax. So there's 24 states here, and in Pennsylvania, while they are not part of SST, they do the exact same thing. They just didn't want to be part of this group, so they do it alone. But basically, if you are selling into one of these states and you don't have, there's a couple of factors, but the two main ones, if you don't have over $50,000 in payroll, or you don't have over $50,000 in goods, either stored in your warehouse or a third-party warehouse in that state, you're typically going to qualify. And when you qualify, that means that those states will actually pay for you to automate. So they'll work with Avalara on your behalf to get you registered in that state, to help you assist with the automation of the tax calculations, both rates and taxability, as well as filing. So it's a huge, huge benefit for merchants, for I should say, out-of-state merchants that have hit those economic nexus thresholds and are required to register. They're going to pay for it for you. And I point that out, A, because it's a huge benefit to folks such as yourselves. And then Avalara is also one of the few certified providers of this program, So that means that these states, or this group of states, have gone in and they have looked at everything we do from a filing calendar to a tax code. And they're basically saying, hey, we understand that Avalara looks at these items, and all of our tax codes are approved through this, by the way, but that Avalara is going to look at an item and assign the right tax rate and taxability on there. So huge thing that you guys can take advantage of when looking to automate tax. That's what I was saying before, that we're part of that CSP program, or Certified Service Provider. And then that's it from the Avalara piece and kind of how we should be looking at sales tax in today's world.
All right, so now we're going to get into a little demo of the integration that we have between Counterpoint and Avalara. I have a couple of screens up already. I'm going to get into two scenarios. One is a in-store purchase, and the other is a phone order. So as you see, we're in touchscreen here, normal function, so we can add a customer to the ticket. We have a blank, clean slate here. I'm going to add this driver here. I came in the store and I want to buy a driver, right-hand driver. And then I want to buy a couple of tour balls so I can practice my hit them with my new driver. As you can see, when we come down here, we don't see a tax yet. Go ahead and click this pay button. You'll see that our tax is updated, and now we're ready to tender. So this tax right here is calculated based on Avalara's tax calculations. So in this instance, we're saying we're taking the store's address and the store's jurisdictions to calculate the tax. So I'm going to go ahead over here and cash this out, pay my balance, and walk out the door with my receipt with my correct tax. Okay, so here's my other scenario. It's where I come in. Well, I'm sorry, I'm phoning in, and I want to have something shipped to my grandfather Joe, who lives in another state. So what I'm going to do is put this putter on here. I want to buy him a new putter for his vacation home in Florida. And then I'm going to buy him a putting mat to go in his backyard to match with that good old putter. And in a instance where it's a phone order, you want to ship it out, we're going to put our ship to on here. I already have one defined. My grandpa Joe, who lives in Miami, Florida, has a vacation home there, and I wanted to send this to his new home as a gift. I'm going to say okay, and I'm going to go ahead and hit pay. So as you see, my tax is updated on there to the 1680, and this is based on the tax jurisdictions in the Miami, Florida area. If we were not to add a ship to this, so I'm going to take this off. Let's see. And I go ahead and click pay, you'll see that my tax rate updated from the $16 now to $18.60, and this is based on the local store tax because I'm no longer shipping this to Florida. So that's just a little demonstration to show you guys that how the tax engine works and how it calculates from the different tax jurisdictions that we set on the ship to. But I want to send this to Grandpa Joe, so let's go ahead and pay and cash this out. Okay, so I have a couple of screens up. This is one of the items that I use as my platinum tour balls from Adams. As you can see, I just want to demonstrate the how easy it is to set up, assign an Avalara tax code to an item in this integration, and it's basically setting up a tax code lookup here. Same thing goes for customers. If you do have, as Jordan explained, if you do have customers that are tax exempt, its basic setup is easy as well. We can assign them a tax exempt number with the entity use code. So now that we're done with the Counterpoint, I'm going to show you guys a little bit on the Avalara side, how those two transactions that I just rung up, how they translate. So this is the home page when you log into the Avalara site, Avatax. And as Jordan was talking about, here is the economic thresholds. When you do have the economic nexus in a state, you'll see this map here, just like how we've seen in one of these slides on his presentation. You'll see the different states that you're probably over the threshold in that state. So if we go to transactions, I'm going to filter this to all. And I have some previous transactions in here, but so I'm just going to say, give me everything that's committed. And sort it by date. Okay, so as you see, there's some stuff in here. I'm going to go to the transactions that was picked up in store. As you can see, we have all of our information here. The salesperson, we have our customer, we have the store that the transaction was rang in, and then we have our ship from, and our ship to. As you can see in this instance, our ship from and ship to is going to be the same because this was an in-store pickup, in-store transaction. If we go to our line items, we can actually drill in here and see which tax code was used, if any entity use code was used, and we can see that how this tax calculation was brought about. Are you collecting tax here? Yes. Is there customer taxable? Yes. Is there product or service taxable? Yes. So we can see all the different jurisdictions and the tax rates for that jurisdiction and the tax amount for each line. I'm going to go back here to my transactions. Might be better if I just press back, and I'm going to go to my Florida transaction that I just rung up, and we can see the differences between the documents is that my ship from is now the store address, and my ship to is now where what I ship to Grandpa Joe. Now, if we go in our tax details, it still tells us all of our why this tax was calculated, and then it gives us the state tax and then the Miami-Dade County tax, the tax breakdowns for each line in each jurisdiction. And That's it. That's it for the demonstration between Counterpoint and how they translate between each other. So now we're gonna get into some Q&A.
We had a few questions come in. One that we'll answer live is it has to do with who's controlling the tax rate and the taxation. So when the Avalara plugin is installed to Counterpoint, the tax calculation is done dynamically at the time of the transaction by Avalara. The calculation and the rates and all of the complexity does not live in Counterpoint. Instead, we make a dynamic call to Avalara. They give us the tax rate, and we pull that back onto the transaction. If anyone has any more questions, go ahead and submit them in the Q&A. We'll get to them. We'll give just another minute, but a couple other points on the topic as well. For multi-store operations, notice that Diorn intentionally used the wording, the store address when we're submitting. So as you're ringing that transaction, it's going to use the address of the store that you're logged into touchscreen with. So if you're doing fulfillment out of a different location, you'd want to ring that separately. Okay, and then a follow-up question to the first question we answered is, what if we don't yet have Nexus in that state? What are the procedures there? So I'll let Aaron or Jordan chime in.
Aaron, you want me to take that, or do you want to take it?
Sorry, Jordan. Yes, if you could, or if you could repeat the question. I'm so sorry.
Yeah. So Chris is asking. Was asking about the thresholds, and then said, what if they don't yet have Nexus in a state? So they're collecting in a state where they haven't yet met the threshold for paying tax. So that's an interesting one. If you don't have, and Chris, if you want to, I can message you my number and you can give me a shout after this if you want to dive in a little more. But if you don't have physical presence in that state and you're just proactively collecting in that state, you can still turn Nexus on within Avalara. So a state's never going to tell you that you don't, like the state's never going to say, hey, don't pay us tax. If you haven't hit those Nexus thresholds and you're choosing to pay them, you are welcome to do that. Most of our folks just don't register in a state until they've hit those Nexus thresholds or have hit that physical presence piece.
Yeah, let me add in a couple points there too. Thank you, Jordan. One thing, and I'm not a tax advisor, so let me preface everything I'm going to say with that. But one thing I have heard very consistently from our tax advisors is that if you are collecting tax, it's very important that you are registered and that you remit it. So if you are actually collecting, make sure that we can help you create a plan to get registered and remit the tax that's been collected. And some companies do choose to just register in all states. They don't have to pay attention to the economic nexus thresholds. Sometimes their customers actually ask them to collect tax so that they don't have to worry about assessing use tax. So it can be seen as a service to your customers. So there could be good reason why you're doing that. You just want to make sure that you get registered and remit it. Did that answer your question?
Chris, can you confirm what version of Shopify that you're using? Are you on Basic, Advanced, or Plus?
Yeah, while we're waiting on that answer,
okay.
Good, using Shopify Plus. So Chris, to answer that question particularly, we'll have a plugin from Rapid to Avalara, and you'll have a plugin from Shopify to Avalara, both pointing at the same account. And so there's just a little reconciliation that you would do between the two systems to tie out the numbers.
I'll also add, I see that you've responded that you have Shopify Plus, and Shopify Plus does offer Avalara rates already as part of that solution, and there is an integration there. So as Matt mentioned, you would just have 2 integrations to your Avalara account, which is our most common scenario that many companies that do have an, omnichannel sales approach have both, in-store sales. They may have e-commerce sales. They may also have Amazon sales. And so we have all kinds of options to receive all of your sales into one centralized dashboard so that you do have that view. So it wouldn't necessarily be any kind of manual intervention that you're going to need to do to pull that data in and reconcile it. That's something that the Avalara dashboard will provide for you. I see a response here that you want to keep those sales separate. And Avalara does have a way for you. I hope this is what you mean by the question, but we do have flexibility in your setup of your account there's a couple ways you could handle it, but we can certainly handle a scenario where a company has different organizations, whether they're separate legal entities or not. We can handle either scenario, but it would allow you to keep the data separate for each organization or legal entity. You could even track separate Nexus settings for each of those entities. And then you can either have a rolled up view and one invoice from Avalara, or we can break it down. I'm kind of getting into the weeds, but basically the answer is that we have a lot of flexibility to handle those scenarios. Yes, we can definitely help. I'm happy to talk to you after the call.
Darren, if you'll bounce us to our last slide, and I think it'll give some final action items here. So if you are interested in the integration between Rapid and Avalara, go ahead and email us at rapidcares@rapidpos.com, and we'll connect you with arent and discuss it from both sides, both from the Rapid side and the Avalara setup side. So we'll get you squared away.
Absolutely.
Okay, I don't see any more questions coming in. So thank you everybody for your time today. And again, email us at rapidcares@rapidpos.com, and we'll keep moving forward. Thanks, everyone.
Thank you all.
Thank you all.